Yo, what it is, Outliers. Happy 13th of December. We are quickly coming in on the end of the year. I made a post in the Discord earlier today letting everybody know that you should 100% begin going through your performance for the year because we're there. This is the time where you're not typically going to make a ton of massive changes in what has happened. And this is the time where you really should start going through comprehensively analyzing what has happened so that then come next year, you can hit the ground running. You can actually start off doing things in a slightly more optimized manner based on what you're seeing. This is something that I do. And I've been doing this for a long time now. The reason why I do that is because markets continue to evolve. The second that you think as a trader that like you got it all dialed in, you already know what's going to happen, it's all, known goods, not. Like it literally is not. I actually just made a really long post on Reddit compiling some of my other posts so that it's a little bit of a reference. That's the point. And as I was writing a part of it, I was reminded of a really, really important piece. The piece that I was reminded of is the fact that even though I've been trading for 17 years now, I've only experienced 3 bear markets. And of those 3 bear markets, 2 of them have been in the last 4 years. So it's kind of an interesting statistic, whatever you want to call it. It's an interesting thing to me because with that context, it lets you know that this world that we're in of trading can be very path dependent, whatever something happens to show you at a given point in time. And for me, obviously a big part of what it showed me was a really prolonged bull market. And people might mistakenly immediately think that that's like all good and great. And wow, that must have been a great starting point. And it kind of isn't. The reason why everything has its series of problems. And that's another thing that I highlighted in the post that I made is for somebody like me, I absolutely have grown up with very much of a resource constrained mindset. And that impacts me in a lot of different ways. Now, taking that back to the idea of path dependency and whatnot, we all are going to face a series of challenges based on our individual circumstances. They all look a little bit different. So there's going to be some traders that maybe came from a less scarce environment that are more and maybe too risk open. If we take a look at trading, maybe we have traders that just started trading during 2020 when the stimmy checks came out and they have their perception of what things look like. The important thing to understand is that there is an element of path dependence around the time that you happen to begin trading, doing whatever you're doing. You have to be aware of that. So going through a review process is non-negotiable because even if you do this for a long time, there's a really solid chance that things are going to continue and move and evolve. And unless you can successfully make that journey with it, you fall behind and you start making mistakes. You start drawing down, you start losing money that you don't want to lose. So that's actually, I think, a pretty solid intro for today. So this is interesting with the tariffs. I actually hadn't been looking at this. What did you guys learn about tariffs here? Oh, look at that. That's hilarious. I love that he has that. When Trump was running for president in 2016, said he might consider okay, then we can pause that. Now, the session for today is a little bit of a reboot from the session yesterday, which is actually kind of a good thing, I think, because we might be able to move through it in a more condensed manner. Because when I'm doing these live streams, I literally never know what direction we're going to go or what we're going to talk about. So it's not obviously a fully polished, refined thing. It's something that we're talking about live. That's the concept of a live stream for those that are curious about that. So we did a video yesterday and we actually spent a little bit of time talking about priorities for a trader. And that's what I want to talk about today. And you might be saying, Eric, if you just said we talked about that yesterday, why are we going to talk about it today? And that's actually a fantastic question. It's a great question to ask because it seems redundant, which I have to agree with you. It does feel slightly redundant. Alas, the video that we did yesterday is gone, dead and gone. The reason why it's dead and gone is because we had literally I'm not even kidding, a 28-second clip of a TED Talk about quantum computing, 28-second clip. And in that 28-second clip, they decided to strike the video. So the video is dead. The funny part about that, by the way, is a lot of times when you have a copyright infringement, what they'll do is they'll let the video stay up and then they just take the ad revenue, which is always a little annoying anyways, because it's like, well, if you do a video I think that video was like 2 hours long and it's 2 hours of unique personal stuff about whatever we're talking about. But if there's this 30-second component, then they then get all of the ad revenue for it, which is a little confounding to me the way that works. But they didn't even do that. They literally just removed it. So that's why every time we start the videos and people are like, yo, there's no sound. Yo, there's no sound. I know, dog. I know there's no sound, which is hilarious. Trey says, hey, this may be the second time they've done this. They shut it down midstream, which was rude. That is true because I distinctly remember that one too. That's when we were watching something about the Apple goggles. And I remember we were watching it from a direct source too, which is crazy. Yeah, the thing with fair use is very strange because I do think that video technically would be fine under fair use. I actually appealed it, but they have 30 days on the appeal because it goes to whoever the creator was. So I think what ends up happening is they see the clip, somehow the YouTube algorithm, super smart, will detect the overlap, and it's normally by the volume. That's why this other way works for now. And my guess is they just get a bunch of them, and they probably just copyright all of them by default without looking at it. So you have to go through an appeal process. Now, I think for bigger creators, what they can do to avoid that is preemptively reach out and try to talk to them about it or something. But I'm still on the peasant world. So I know for a fact, if I reached out to TED Talks, they would literally say, go fuck yourself. And I don't blame them. I am a peasant. I am nowhere near the same level as they are. So I thought we would begin with a recap of this priorities for a trader discussion that we had yesterday. So let me grab our little drawing pad. And I'm actually hopeful that we can talk about this in a slightly different way since we did just talk about it yesterday. I'm going to go through the general artifacts that I think belong here. But I think people probably have had a little bit of time now to digest, specifically if you were on the live stream. If you weren't on the live stream, then yeah, you'll just have no idea what we're talking about, which is good. This will be a first of its kind for you. So we had a conversation about the priorities of a trader. And if we look at the world of a trader, it starts first with goals. The reason, if you'll recall, why it starts with goals is because literally everything else we do is going to be reverse engineered from this. So this needs to be specific. We need a very, very specific thing that we're trying to do. It needs to be measurable. Without something that's measurable, we are shooting at a highly nebulous target. It's kind of a waste of time. It does need to be achievable. It needs to be realistic within the bounds of where you're at. And I normally skip the R of a SMART goal. I think it's relevant or I think the R is relevant, but I don't really do SMAT because I just think it's an extra word so that they can make the word smart. I think that's whatever the R is based on what I looked at it before. I think it's covered in this, which is time bound. So when we think of our goals, a lot of times we start with really superficial ideas. We start with, I want to be rich. I want to make a lot of money. One of the things I work with a lot of people in the mentoring program, which is really interesting to me because it shows the detachment. That's actually one of my favorite things that I have the opportunity to do with the Patreon side of things is I get a chance to like really get much closer to retail traders to understand different perspectives and how we think about things. And it literally helps me inform everything else that I do because I am full well aware that the way I do things is very different than the way a lot of other people will do things. I'm aware of that. So a lot of the things that I would say or do or prefer doesn't inherently apply to anybody else. So it lets me tailor things more specifically. So taking it back to the point I was making, when we look at the goals, I'll normally say something like, what's your goal? And the goal almost looks the same, slight variations. The goal will be, I want to replace my income. I want to retire in 15 years. I want to have, it's actually rarely a certain amount of money. Most people don't say a certain amount of money. It's normally one of those first two, definitely. And then what would I say the third most common might be? I don't think it would be like make money. I don't think it would be reduce risk. I honestly think the overwhelming majority of responses fall into one of those first two buckets. So that matters because if you think about those goals, they're fine. And here's an important note that you have to take on board early with your priorities. You do not need a perfect goal to start. As we talk about these priorities, and as we talk about literally everything you do as a trader, what I want you to always keep in mind is an 80% solution now is better than a 100% solution later. Now, there will be certain things that this doesn't apply to. If we're talking about stuff that's like very, very, very high on what we would call a RACI matrix in the Marine Corps, and I think other services use different versions of that too. It's just a way to evaluate risk. But if we have something that's very high severity, meaning if you fuck this up, the severity is massive, then that deserves better than this 80% now, especially if you have the luxury of time. But the premise behind 80% solution now is greater than 100% later is really to get people out of their own way. And I'll give you an exact example. My original goal as a trader was to be a millionaire before 30. That was my original goal. And guess what? Moving in the correct direction is plenty fine. That as a goal got me moving in the correct direction. It wasn't a perfect goal. It was actually one I've needed to revise a couple times, but that's what started me off. So what I'm trying to highlight is you don't need a perfect goal to start. Pick something that generally starts moving you in the correct direction and then refine it as you go. Now, if you're further along in your, because I'm talking about 17-year-old, I don't even know how old I was. I'm never good with ages. I was always curious about this. My dad, before he died, I used to ask him when I was a kid, like, how old you are. And he would literally say, I don't know. And that was the most strange thing to me. But I cannot identify more with that man now because I literally don't know sometimes. So anyways, I don't know how fucking old I was. But I do remember that this was back in like 2008, 9. It wasn't my first year of trading, but it was after I'd been trading a couple of years. I was like trying to think of what I could do with this. So I just picked fucking something. And at that point in time, it was fine. Now, if you're further along, if you have a family, if you have a wife or a husband, kids, you don't get to be lazy anymore. You're a grown human being. You are absolutely able to go through a planning process. So what that means is when we're setting goals, they need to be more specific. So for somebody that says, I want to replace my income, for an example, do you think that this is a good goal or not? In your genuine opinion. And then I'm going back into my videos really quick to grab the video about setting goals. This video. But do you think that that's a good, do you think that's a good goal? Replace my income. I would argue that it's fine. It's a fine goal to start with, but it lacks a tremendous amount of specificity. Because here's the problem with this as an original objective. Lizzie says it depends on your personal picture. I agree with that. And to broaden Lizzie's point, there's more nuance to this. Because if we want to replace our income, that stands for year zero. That stands for the year that we're going to try to replace our income. So if we have $100,000 as our salary or whatever, that means that we would probably need to earn through trading like 125 or something like that, depending on how the rest of this shit looks. So this could be fine to start. The problem is that if you're 35, is this the same amount of money that you want to live off of for the next 50 years? Maybe. It could be. And this could be completely fine. You might even say, I need less than this. That's great. The point, though, is that it should be considered, and most people don't consider it. This is because most people are trying to solve the problem that's right in front of them, and they're not thinking more deeply about what they're doing. So what that means is if I'm standing here, this is a normal sized person that has regular arms, and my foot is on fire. Don't really know how it caught on fire, but my foot is on fire. My immediate concern is this: making my foot not on fire anymore. That's what this is the equivalent of. Your foot's on fire. You're thinking about only your foot being on fire. Now, as an example, this is kind of a fun example that's just like, this is actually kind of fun. Like thinking of random stuff in my brain. The equivalent of this example is if your foot is on fire and your solution for your foot being on fire is to jump into this vat of whatever to put the fire out. So this is your solution. You're going to jump in this vat. The problem is when you jump in the vat, it's fucking acid. And then your face melts off like this. So even though there's a big problem up front that we have to solve for, we are too focused on this immediate problem, and we become over-focused on this empty problem, on this upfront problem, that we're not considering the solutions around us. So this just looks like better choice. I'm going to jump in here to be put out. But it's fucking acid, and now I'm melting. My skin is bubbling and falling off. That's worse than this. It's actually worse than this. This is a little bit extreme, obviously. It's kind of I don't know why my brain is like this, but it is. This is just the example I thought of. But that is the equivalent of this, because you can become so myopic on trying to replace your income here that you fail to think about this 50-year time frame. And then you can do everything in your power to build a system that allows you to hit this. You could build a system that checks this box for you, but it comes at the price of building something that's more robust, scalable, and actually serves you better in the long run. So maybe rather than jumping into the vat of acid, you run outside where there's a hose and you put your foot out. Here's the downside to that. By the time you get out there, you're going to have some burns. You're going to have some third-degree burns. You're going to absolutely have an affliction by the time you get there. But I would argue third-degree burns on your leg is still preferable to jumping into acid. This is bad. This is a bad life choice almost always. And Joey brings up a great point, because if there's an open vat of acid, you might want to check what's coming out of the hose before you start squirting your leg with it. Maybe you have a friend nearby and, you just give them a little squirt, something like that. Make sure that you're good. This is a really great point, Joey, by the way. But the main thing is a little bit of near-term pain and acceptance might be a better solution ultimately. That's the same thing here. We don't want to get so stuck on solving this upfront problem that we then forego thinking about potential future problems that we just hadn't considered yet, because they're still there. And this is what most people do. And again, I've had quite a few people in the mentoring program, and this is a very common thing, because this is still a much better starting point than what a lot of people will come up with. And it's not their fault. They've just not thought through this before. And we can solve for this. The way we solve for this is through something, and it can be whatever you want, but something like the money mindset exercise. Again, this document, I built it for myself to literally help me solve this fucking problem, because I didn't know what the answer was. But putting yourself through a thought exercise to help gain some clarity around this can literally help you solve this problem. That's the point. So this is goals. This is your first priority as a trader before anything. Literally, like Metallica says, nothing else matters at this point. Nothing else matters, because without a goal, it is just a fucking crapshoot. That's all it is. Without a goal, this is a straight crapshoot. Okay, cool. So now that we have our goals set, your next priority as a trader, let's say we know that we wanted to hit this target, and let's say that this is well defined. Let's say that you think that this is a good starting point. This will solve your first 5-year needs that you intend to expand over time. That's perfect. That's exactly what you need here. So that's what's going on. Beautiful. The next step is we need to brainstorm. How do you get here? And yesterday we talked about a lot of really great ideas to get there. We talked about things like selling illicit substances. We talked about things like selling the flesh of your body. You do have spare body parts like extra kidneys. Those can be offloaded. You don't really need it. I don't know if there's really a market for, what are those things? Tonsils, the things in the back of your throat. I don't know if there's a market for those, but you got those. People get them out all the time. Same thing with the dangly thing. The epiglottis is the flap. I don't know what the dangly thing in the back of your throat is called. But whatever that thing is, maybe you can offload that to somebody that wants a new dangly thing. They're trying to upgrade theirs for some new shit. Those are great ideas to start with. Now, the problem with this is that you will slowly run out of body parts that you can sell. There's only so many of them. So then we're going to need to move into another phase. And this is actually a really great description of the thing that I talk about. You can't save your way to wealth. Reese lets me know it's called a uvula. Great, thank you. That's for everybody that is wondering, same as I, dangly thing, uvula. So maybe you can sell your uvula. But you can't save your way to wealth because you can only cut so much. And in this example, you can only cut so much off or out. So now we need to start coming up with some other ideas on how we can hit this. And you can think of a bunch of different ways. This step is very basic. I am just trying to think of a conceivable approach. So we used examples like day trading, swing trading, market making, value investing, so on and so forth. So this process is just to give you a basic understanding of what modalities might be there. Then now is when we apply even just a little more rigor. We're not getting into the strategy process yet. We're starting at a very high level of exploring the profit mechanisms from all of these, all of our ideas, and seeing what fits. What can we easily eyeball out of the way? Very, very basic, very basic. And for example, you might look at something like day trading and you might say, okay, day trading, it seems like you can make some money doing that. And, but then you realize that you work a full-time job and you can't get to your phone during most of the day. Okay, well, day trading is viable, but it's not applicable to you. It's just not something that fits in your scenario. So we can axe day trading off this list because we know the general profit mechanism from day trading is being in front of the screen most of the day, trying to trade intraday price fluctuations and so on and so forth. So we then create a short list from this. This is literally your entire first series of steps as a trader. Now, if you're starting this brainstorming phase and you're like, I don't know anything about swing trading. I don't know anything about market making. I don't know anything about value investing. This means you need to spend a little bit of time learning about these. And if you're a new trader in this section here, between goals and brainstorm, I would literally read options as a strategic investment. I would read volatility, pricing, Volatility and Pricing by Natenberg. And then I would read Positional Options Trading by Ewan Sinclair. This is for a brand new trader, these 3 books. And I think these 3 books are highly applicable for a brand new, specifically options trader, because these cover a lot of bases and they also give you a very natural sense of a progression for yourself, because you're going to need to track questions and build a syllabus. Now, we talked about this in passing yesterday as part of some of these other steps. I'm adding it as a distinct step here because I do think continually creating a focused learning path designed to answer questions that are specific in setting specific time, frequency, and topics for our learning sessions. And again, I would literally pretend whatever entity, whatever thing that you might make a, whatever entity or thing that you might make an appointment with, that in your mind, in your world, there's a 0% chance that you would ever miss the appointment. That's what needs to happen here. Very, very specific process. Lizzie says, this is better than yesterday. Well, that's good to know that you thought the time I spent yesterday was straight trash and a waste of everybody's time. So that makes me feel good, Lizzie. I appreciate that feedback. And maybe it's good then that that video got copyright struck because, you know, obviously the effort that I put into it was worthless. It's just good to know. I'll take that to heart. And when I'm sitting at dinner or something later, maybe I won't eat because I might think that I won't be worthy of eating at that point. I think that would be fair, because it feels like in order to eat a meal, you have to be worthy, right? Like you have to put some work in, you have to have some sort of output. So Lizzie's essentially told me not to eat anymore. So I'll probably take that advice on board. I won't eat anymore, and then I'll punish myself. So really appreciate the feedback, Lizzie, on that. And yeah, just for everybody's awareness, just don't watch the video yesterday because Lizzie said that it's a giant piece of trash. So message received, Lizzie. Thank you. Very clear, by the way. So now we have our first 4 steps. Are there any specific questions on these 4 steps? These 4 steps are your, without a doubt, the straight priority. And it's in this order. It's literally as simple as it gets. Now, again, simple doesn't mean easy. They're different. But that's all there is to it. These are your first steps, without a doubt. And what I try to remind people is, for anybody that is going through this process trying to figure out their priorities, and this is what I offer for the folks that are in the mentoring program, but you could also just jump in the Discord. Again, there's an entire free section of Discord that will always be open for everybody. Now, fun fact, it's going to be flooded with bots always. That's the nature of having a free community space. They're going to find their way in, but just don't go to your DMs. That's all you have to do. Pretend that that's like the dark web, and you avoid that place unless you're savvy with navigating your way through it. But you can always reach out to us and say like, hey, this is what I think I'm going to work on. This is my ultimate goal for the end of the year. Does this make sense? Is this like a good priority for the next week or for the next month? And people will give you feedback, because the process of that, again, is beneficial to everybody, because somebody else seeing what you're working on, how you're thinking about it, might give them some ideas. And the process of trying to give somebody advice also forces them to think through the process for themselves. So it literally is a mutually beneficial approach for everybody. So if you're like really hung up on what to focus on next, ask somebody. And again, for those that are in the mentoring program, I have a doc that we maintain each time we meet where we should be inputting. And I always offer that to everybody. You can input exactly what you're going to focus on for each week for the next set series of weeks. Tag me in it, and then I come look at it and give you direct feedback on whether or not this exact thing makes sense. It doesn't matter what shape. You could use ChatGPT if you want. But the main thing is, don't let the questions stump you and stop you from going through the process and making progress. Again, it goes back to this thing. You don't have to have a perfect roadmap in place, but you need something that's generally going to move you in the correct direction. So these are your first 4 steps. Now, let's fast forward and let's say that we're moving through these pretty quick. Let's say that you have your goals. Let's say that you've brainstormed different approaches and you found a couple that you think work well, and you have built yourself a way that you want to learn about these approaches that preliminarily look well and stuff like that. Step 5 becomes the outlier strategy process. This is exactly what happens next. So for those that haven't seen this video, I'll grab it for you. This video here. And this is literally where you enter into the outlier strategy process. And it doesn't, you don't have to do the outlier strategy process. You can do whatever fucking process you like makes sense for you. I offer the way that I do things to give you ideas. It is not prescriptive. I hope all of you know that by now. The stuff that I share, the stuff that I discuss with you is purposefully designed to be things to get your thoughts flowing, to give you a starting point, because sometimes that's the hardest element to come up with, is literally just a starting point. So we then run the outlier strategy process. Oh shit, I gotta get my pen. Hold on. This is what you do. You define the profit mechanism for whatever you found, and you get way more specific now in terms of the type, the signals. Again, this is where we get qualitative and quantitative information about it. We get very, very specific. Here's where we outline all the different structures. It's essentially what you did in the brainstorm step, but now it's more specific to the general approach that you think you're going to try. So say, for example, you came across the momentum, whatever it is that you wanted to try trading, and you've got that listed out. You understand the profit mechanism. You understand the type and signals that are applicable. Now we start listing all the individual structures that might make sense for this. So that's looking at stuff like buying stock, buying calls, so on and so forth. And then after you conduct another eyeball test, and again, remember, the idea behind an eyeball test is to be able to just weed out things that are bad or don't apply with minimal effort. So again, another great example is maybe you're trying to trade a momentum. Let's say you have a $10,000 account and you're trying to trade based on the momentum research that you looked at SSRN, because you're studious and enterprising and you're going to leverage existing research to come up with your ideas, as you should. That's very smart. Nice job. And you say, well, in order to like really, really capture momentum, we need to have at least 8 to 15 holdings, something like that. So then you might look at what you might be able to do in terms of buying stock with your $10,000 account. But if you have 15 holdings and you have a $10,000 account, you really can't put on big positions. So you might say, well, buying stock might work. It might be the simplest, but this might not work for me because I need a little bit of leverage for more capital efficiency. So maybe we start favoring something like buying calls. That's an eyeball test. You can do that in seconds. Doesn't take a lot of effort. So then once we complete the eyeball test, we pick the top performers. And this doesn't have to be the top one. This could be like the top 1 to 3, whatever you want. And now is where we do the work. Now is where we go through the effort of building the strategy. This is where we test all of the different permutations that we think might apply. This is where we tinker with buying the calls that are 10 days, 20 days, 50 days, 100 days, 200 days, 365 days to expiration, so on and so forth. This is where all the work is done in the strategy development. And in step 6, I'm going to use my mouse here. We need our trading plan, trading log. Oh shit, S is tough. S is tough, bro. Especially with my mouse. S. Strategy outlines. There we go. Got it. Got it out. That's literally a comprehensive list of priorities for a new trader. So first things first, let me know if you have questions on any of this stuff. Travel Ursel says, I don't know where this fits in, but there's also the trader psychology. Some strategies when you try, you may work, but are not for you because your personality in mind. It's a great point. And it's also a really delicate dance because some of it is finding things that align well with you, which is exactly what this process will identify. But the other part of it is getting your brain to adapt to be more successful in interfacing with different things. So I have 2 videos that I need to share with you. The first one is about trading plans and trading logs. The next video is actually a response to, I think, what Travel said up above, which are some of the elements of trading psychology. This is a recent video I did. There's actually another one that I have coming out in a couple weeks. And then, as always, Trey J is doing the Lord's work and giving me an excuse to plug my paper trading video that has a resounding 460 views. I love that. So it's literally a classic, absolutely classic scenario. It is hilarious. So how do we feel about that? And this was originally from Lauren and Lizzie. And I really do want to make sure that you both are comfortable now that we've had a couple times to talk about priorities. And I actually think what would be really great for both of you, because I think both of you are in the Patreon, if I'm not mistaken. So you both should dump it in the Discord. If you can, dump it in the Discord now. And we literally can take a look at it together and the way that I would think of it. And for those that would like as well, you can drop it in literally in the chat here. And we literally can just run through a quick feedback session for people. It's super, super fast. It doesn't take long. It's easy to do. And here's what we need. $12-month objective, 6-month objective, 1-month objective, week over week priorities. And this is for this first month, leading into this first month. The week over week priorities are going to change, but it's got to happen. I got to open a window. I have, it's funny. I have these shirts from like this weird brand that I came across that I like their shorts. And they have like these really thin shirts, but somehow they're like nuclear warm. They're so warm. I don't understand how or why. It doesn't make sense. It's kind of like fairy dust or fake news. All right, we got to see what Mel wants for dinner. I'm getting hit up for the dinner order. Bulls 101 says written trading plans help me the most with combating my biases. Absolutely. And the fun fact is, as you're going through the process of building a written trading plan, it's naturally going to give you what you need to work on, right? So let's say that I'm running a strategy. Harvey says, is it Uniqlo's heat tech? No, I don't buy anything specifically for heat at all. I'm so warm naturally. There's a 0% chance I would buy specifically something designed to keep you warm. I actually think this is literally, it's like, it's sheer. I don't know if you guys can see through it. I could see through it pretty easily. Like very, very sheer, but it's still somehow very warm. But I forgot. I literally got completely sidetracked. The fuck was I just saying? I was talking about some sort of example, priorities, trading plan. Perfect. So let's say you're building a strategy outline. And again, that trading plan video goes through all of this, but you're going to write your executive summary. You're going to have your section for your setup. You're going to have a section for entry/management. You're going to have a section for AAR. And as you're building this, you're naturally going to come up with questions. You're going to come up with things that you need to figure out. So for our momentum, we might need something like understanding momentum. We might need to figure out, what does it look like? We might need to understand what stocks exhibit it. We might need to know how it behaves. We might need to know what signals predict it. This process, as you're filling in your executive summary and as you're starting to fill in the actual strategy outline within your trading plan, it's going to identify all of these fucking questions that you rightfully will have. So now what's week one priority? Well, week one priority is to understand momentum. So what does this mean? Maybe I'm going to watch some videos. Maybe I'll hop on SSRN like a good enterprising trader should and look at existing research. Maybe I should grab a book, start reading it. Maybe I can ask ChatGPT to summarize. I don't know what's going on with my little pen. It's starting to get real squirrely on me here. But what I'm showing you is that you literally can create your own series of highly, highly tailored, specific, applicable focus topics based on this exact process. Lauren says, I do hair and it's the holidays. I haven't had a lunch break in 2 weeks. That makes me a little sad, Lauren, because I'm still supposed to be getting my fucking hair did by you. It's about time. I need to get my hair done up for, just to treat yourself. And you still have not offered to do my hair, which is a little frustrating because I feel like if somebody needs their hair did, it's me. And yet you forsake me for some strange reason. I don't understand. Lauren says research with focus. I learned that yesterday. And that's actually a really important point because the problem set that you face now is actually very interesting compared to the problem set that I faced when I was learning. When I was learning, it was information scarcity. You literally couldn't find a lot of it because there just wasn't that much work out there on trading, specifically options trading or anything like that. Whereas now today, it's kind of the inverse. There's so much information that you could easily get completely caught up in just looking at random shit that may or may not matter. And that's why going through this process is so important, because this process is literally what gives you the shit that is important for you to focus on. Got to get done. So, and this is why as a trader, you have to be a thinking, adaptable being, because the problem sets that you face are going to continue to evolve. And if you can't autonomously adapt to solve for different problems, you're going to have big fucking problems, because trading is going to continue to move and evolve at a rate that literally forces you to keep up and figure it out, or straight up get left behind. And if you're trying to do this for a living, we do not want to get left behind. So that is my approach to managing priorities as a trader. It's that whole section summarizes to create goals, create a learning plan based on you filling out your trading plan strategy outlines, and then be very specific about what you're trying to learn and when. Be intentional is the idea. Lizzie says, my goals are in the Discord. Perfect. Let me go grab those so that we can look at them together. I'm going to clear this whole thing off. We'll take a look through this, and then we will pivot after this. Also, fun fact, on Twitch, I still have 0 followers, and I have nobody watching. It's perfect. I kind of get a kick out of that. I envision myself just talking to nobody on Twitch. I don't know why I think that that's entertaining, but I do. All right. All right, Lizzie, where's your stuff? Show it to me. Okay, here we go. And just to show how much of a problem Liz is, take a look at this. Liz in here goes by Lizzie, but then here she goes by Liz. This is what I'm talking about. I don't know what it is with the Liz's of the Outlier community, but y'all just like fucking playing with me. That's what I've learned is you guys just literally try to make this as difficult as humanly possible. Straight up. James says, is Twitch really known for live streaming financial related stuff? Thought it was like video games and stuff. It's definitely primarily video games and stuff for sure. But there is a small finance presence on there. The main reason why I'm even trying the dual stream thing is because, especially for the people that would be on Twitch, I am hopeful that some of them will randomly stumble across this stuff because most of those people are going to be at the age that this stuff is really fucking impactful. That's my thought. But I could be completely wrong, but that is my guess. All right, let's see what Mel wants for dinner. All right. Joe says, how was pizza last night? It was fucking trash, bro. It was not good. Trash is a little dramatic, but it definitely was not good. Like, would not order from there again. Okay. Let's see what Liz's priorities are. New setup, large monitor, rearrange scheduling, start 15 a day. What goes in there? Okay. So here is the important thing. This stuff doesn't matter. The setup doesn't matter. This is stuff that's already done, which is good. Rearrange scheduling, I imagine, has to do with creating time, which is good. So I think here it's define (15-minute) segments, which is this here. But the first thing is to figure out where they go. Where are the 15 minutes that we can always get to? That's what this is. Week 2, this is not it. Because this is kind of like saying breathe, right? Like we're saying that we're going to start the 15-minute per day here. We don't need to say that we're going to keep doing it because you need to do it. It's there already. We already have this. So for week 2, this is where we need to define our priority for the week. So this is more so what belongs here. This can belong here. That kind of thing. But this is fine. Like, this is completely fine. This is completely fine. But this is not, because this is just a given. So now we have clear 1-month objective, which is great. And we have a clear 6-month objective. So for the 6-month objective, have trading plans and logs. That means somewhere in these week over week priorities, we need to make room for trading plans and trading log development, whatever that means. Spend 5 minutes updating the trading plan. Spend 5 minutes going through a trading log. Like, all of those are completely viable. I'm getting lit up. Let's see what this one is. Getting lit up by Mel. Let me know it's time to order dinner. So you'll have to excuse me for a moment. Let me know if that makes sense, though. That's why we include the 12-month, 6-month, and 1-month objectives. Travel says, what about a step to evaluate if plan is working? That is inherent to this. So one of the things that I talk about doing, it's a great call out. One of the things that I talk about doing is a weekly, monthly, annual AAR process. So the AAR process after action review is exactly what it sounds like. It's where we look through what we did and how we did. So for example, the AAR process for the 1 month is going to be all about this. Have I researched whatever I'm supposed to research? And again, this should be more specific with what I'm trying to research. But the question is, have I researched what I'm supposed to be researching? Do I have a trading schedule that works for me? That's what the AAR will be for the first month. On a weekly basis, this is where we're tracking our progress towards that 1 month objective, which then feeds into your 6 month objective, which then feeds into your 12 month objective. So to tie all that together for you, if our 12 month objective is to make 10% profit in a year, that means that we need to have trading plans and strategies that have the potential to yield 10% profit per year. Do we have that? The 1 month objective might be research one approach that can move me towards 10% per year, whatever that is. The goals purposefully should nest within one another so that our shorter term goals feed into the longer term objectives. That's the process here. All right. Let's see what we order in tonight. Do you guys have, Mel likes crispy burger. Do you guys like, I don't know anything about that. What is that? Oh, it's just like a burger place. That looks fine. I don't really care. It looks like some sort of local chain or something. It looks fine. Joe says, never heard of crispy burger. I don't know where they're around. But this is cool. I can dig it. Cool. All right, we're all ordered up. Okay. Are we generally good, comfortable with priorities, priority development, all that kind of stuff? I think this should just about give everybody a pretty clear initial roadmap and focus, at least on what to do for next steps. Joe says you sound like a robot echo. I don't know what that means. Does something sound weird? Robot died. Oh, it might have been as the desk was raising. Cool. Well, clear this off. Now, the other thing I wanted to do really for however long we want is we can run through whatever you want. Like we can have kind of an open conversation here for a little bit. If there's anything that you guys want to talk about or take a look at. Liz says, can you set the video for transcript tonight? I don't know what that means. Do you mean like to have the video produce a transcript? If so, they automatically do it. I don't know how long it takes them, but they'll automatically build captions for them. Travel says, I have a question on strangles. Yeah, of course. Let's do it. The rest of the session tonight is just kind of an open conversation, an open dialogue about whatever we want. Maybe we can go over the post that I made in Reddit. I think there might be some good stuff in there. Lizzie says, yes, it didn't happen last night. Yeah, because they took the fucking thing down. They nuked the stream. But it normally doesn't, I don't think it happens that fast anyways, especially for longer videos. I don't think it's like an instantaneous thing. I don't know how long it takes, but it takes a little while. Bull says, what's your Reddit username? Genuinely, I have no idea. I literally don't even know how to see that. I'll see if I can figure it out though. But for travel, let me know what the strangle question is. Happy to take a look. Joe says, I think the trick is to not let it play longer than 30 seconds without talking over or pausing it. Yeah, well, that falls into fair use, but it's not defined because the video from last night, I literally looked at it, is 28 seconds. So it's not 30 seconds, unfortunately. But the homework that I've done on fair use is that it's actually not limited to any specific time frame. I think they look at it subjectively, but part of it would be the total time frame relative to the total length of the video. But my guess is, again, for bigger channels like that, they probably just see a smaller channel like mine. And I'm imagining that they get the alert and they're just like, yeah, fuck that. Like, I don't think that they're actually looking over it to see, like, do I think that this is good or not? That's my guess, at least. I don't actually know from a practical standpoint. So yeah. Okay, so Travel says, so imagine 1 month out, one put, one call. The put is at 50%, so want to close. So not just call. So then what? Let me see if I'm understanding your question. So in this scenario that you're outlining, you're saying that we have a short strangle that's 30 days. And I'm assuming you mean sold to open. So we sell to open a strangle. The put is at 50% of max profit. So if we sold to open one put at $1, sold to open one call at $1. So you're saying the put is at 50%. So we're saying that in this case, the put is now at 50 cents. The call is now probably, well, depending on what volatility and stuff did, the call might be worth more. It might actually be worth less. Let's use this scenario where the call is worth more. Let's say the call is worth like $1.25 or something like that. And you want to close. So what you can do is you can buy to close this for 50 cents. That means that you're going to realize your P&L of 50 bucks on the short put side. And then you're going to have the short call side that still remains. So the question of try to get another put for the same expiration, that comes all the way back to whatever strategy you're trying to do. This sounds like you're trying to break the strangle apart into different pieces, which is okay. It's viable, but you'd have to test like what you're trying to do this in and whether or not it makes sense. So that to me is the first step here to figure out. It's not so much should we just add another put, but the question I have is just like, what's the plan here? What are we trying to do with this strategy as a whole? because it sounds like you're trying to arbitrarily apply the tasty trade methodology of like 50% max profit or something. In this case, I'm speculating, I'm guessing, but that's my guess, is that you saw something from Tasty Trade about 50% max profit. So I think you're just trying to apply that in this circumstance, which is an okay starting point. But I think it's a little bit nebulous because, say, for example, the trade has passed a week and your put is showing a 50-cent profit on it. It might be exactly where you want it to be now. So there might not be a reason to take the trade down. It's doing exactly what you want. The trade is doing exactly what you want. You might want to move the put to rebalance your deltas if that's part of it. Travel says, so covered strangle should treat as whole, not two parts put and call. Okay, so that's different. That's another strategy. What we're talking about above here is a short strangle. What you're saying here is a covered strangle. And a covered strangle has 3 legs, which also includes a share component. So I'm not sure which one you're discussing here, but they're different strategies. A covered strangle. I understand. That's completely different now. Now I understand. So for a covered strangle, that is based on whatever you would want to do with the put, because for a covered strangle, there would also be shares. In this case, we would have at least 100 shares of a stock because there's a short call out. I guess the short call starts here. So if we want to do something with the put, then for the covered strangle, there's a couple questions I ask is, why am I taking the put off at 50% max profit? Do I think that risk is going up? Did I make 50% max profit in 2 days and I want to roll the short put up to make more money to follow the trend? Am I trying to reduce overall exposure of the covered strangle position? Meaning if I have 500 shares here, I have 3 short puts out and I want to take some of the total risk down. So maybe I take 2 of these down or all 3 of them. The entire premise of the management of this put is not just taking it down because it's in profit, but it's what happens next. And one of the first questions to answer this is, if I'm trying to take the short put down just because it's in profit, then the next question you naturally have to ask yourself is there something else that then I can put on after I take this off? And if there's not a good answer to that, then don't do that. So what I mean by that is you might look at taking these short puts down, and then you might say, well, I don't actually want to sell more because I don't want to move the delta up. I don't want to move further out in time. Then maybe these just stay on instead versus just taking them down at like a 50% max profit. So it does go back to the same concept of what is the purpose of the strategy? What are you trying to do? But with the covered strangle, I normally would let the option component of it take in way more profit than 50%. There's no reason to cap it at 50%. Unless there's, again, a portfolio driven purpose where we're trying to reduce risk, we're trying to gain more exposure, whatever the case is. So I would take a poke through some of the short strangle videos that I've done and see if that helps you out. It's a good question, but it's a very very nuanced answer. Cool. I think that's all we got. That's all I got for tonight. Now, the last note I'll give you guys is I am going to be doing a new Outlier options trading bootcamp come the new year. I'm in the process of building the syllabus for it, actually, that I talked to you guys about. And I would actually love to brainstorm that a little bit with you all. So if you don't mind hanging out for a few minutes, everybody can drop off. That's just trying to see what they can learn from like a trading perspective. This next part is a little bit more brainstorming and helping me figure out honestly how to help you guys. So my idea for the upcoming options trading bootcamp is we've had a few prior boot camps where we've spent time working on like the very, very basics of things, right? Like the theoretical elements of options trading and stuff like that, which is kind of my idea for this one to start. But I want to figure out for most of you, because most of you are the ones that tend to be on the live streams, right? So I'd rather make live streams and I'd rather the segment be way more applicable to you all. I'd like to get a sense of how comfortable you feel with like the basics of options. And what that means is this. Let me grab this. What I mean by that is if I put this up, like, is there anything in here that's new to you, that's novel? My guess is for most people it would be no, like as to like why we might trade options and stuff like that. The question is open-ended because I'm just trying to get a sense of what kind of things and what kind of concepts you all already are very familiar with and comfortable with, because then the boot camp itself will be tailored to that. So what that means is I'm still going to go through the basics, but instead of doing, for example, a first session that's all about what options are and what derivatives are, maybe if most people are comfortable with that, we can do a session that's what options are, what derivatives are as an overview, and then we can cover a couple other things like who the market participants are and stuff like that. So that's what I'm thinking about. And what I'm probably going to do is keep those videos specifically to an hour, like a very strict hour. And the reason why I'm going to be more strict about that is because one of the pieces of feedback that I got in the last one is that there was, for people that were like watching the recordings, it was a little difficult because during a lot of the videos, I was taking questions and stuff in the middle. So I think what I'm going to do is I'm going to still take questions and stuff, but I have to be more thoughtful about where I do it. So I'm not going to wait until the end. That's too long. I'm not going to do like 45 minutes straight and then 15 minutes of questions. I think that that's way too long. But beyond that, what I'm going to do is figure out how much stuff I can put into a block. And then there might be 2 blocks or 3 blocks or 4 blocks during one of the sessions that are an hour long. And then after the block is each block is where we'll do questions about the preceding block. Okay, so let me see. Lauren says calls, yes, puts, no. Okay, so Lauren's on basics. That's fine. Will Strat Joe says rates. Okay, so you have questions about that. Reese is curious about vol, structural alpha. Okay, so this actually seems like I can probably... Yeah, so this is actually really, really helpful, to be honest, because it gives me a sense of where everybody's at. So it actually might make sense to do it essentially from the top, so to speak, but then I can bucket stuff like this. This you've all seen a million times. This you've all seen a million times. So I can bucket stuff like this into a block that would be pretty quick to like run through these sorts of things. And then we can spend, so I'll probably target like maybe 3 blocks per session. And then each block would be like 15 minutes. Yeah, that's solid. Okay, super, super helpful. Thank you. And Bull says, do you have a way to track opportunity costs and prioritize trades? That's probably what I need to improve the most. So you have to be a little more specific with respect to opportunity costs. Do you mean like other trades? And if so, other Other trades, you can literally track that in a Excel sheet, right? Like in your trading log. That's what I do. Is I don't just track the trades that I have on. I track trades that I might have taken. That's actually what I'm doing a lot of this week. I put on a couple trades. I'm not going to lie. I'm supposed to be taking stuff off because I have some travel coming up. But your boy's a degen and I can't fully step away, especially if I see opportunities that I'm like, yo, there's no way I'm not going to at least do this. But I'll just size it down a lot. But beyond those, what I do is I build a log that lets me track stuff that I might have taken that I didn't necessarily take. And that's exactly how you can track the performance for those and see what other trades might have done for you and see if there's any trends you can pivot between. Travel Ursel says, for me, managing with examples of trades going different than expected and or against the strategy would be helpful. I agree with you. I think the problem is, even for like most of the group here, especially for like the beginners, I don't actually think that would be super useful for a beginner series, at least until like the very end. Because the problem with that is it's kind of like if you watch a really good jiu-jitsu player, and from the perspective of a jiu-jitsu player, if you're working with a black belt, a lot of the things that a black belt might do actually can be anti-fundamental. They know different areas and elements that they can break rules and why in a certain situation a rule might be broken. So for the overwhelming majority of people, specifically from our community that especially come to these sessions, right? The trading basics and for beginners, is I actually think it would be way, way, way better time spent talking about things like understanding profit mechanisms or tracking profit mechanisms. The problem with that, and I've already identified this, is that there literally is an element of it that just comes down to doing the work. And my best guess is I think that that's where a big fall off happens for a lot of people, because a lot of this stuff I think you guys are very familiar with in terms of a general process perspective. But then there's the process of actually doing the thing. And there's no way, there's no amount of talking about it or discussing around it that will substitute for doing the thing. So I'm also cognizant of that, trying to make sure that the stuff that I'm talking about will help lead us towards the thing. So I think what we might do is I'll finish making the agenda, the syllabus, and then I'll break it down into blocks. Normally it's like a 12 week thing. So it'll be 12 hours total. I think that's about right. And then I'll split it up into 15-minute blocks, and then we'll do 2 to 3 blocks per. And I'll throw that in the Discord and see what you guys think. Make sure that it's, moving in the correct direction and the stuff that will be useful to you guys. So super helpful. I appreciate the input. I'll probably ask for some more so that I can make sure that the stuff is solid for you all. Right on. I'm going to sign off, work on a couple videos. I will catch you guys tomorrow for the GME live stream for those that are going through that. And then if you guys need anything else, let me know. Hit me up. Be an outlier. I'll see y'all later.